my dear traders, today is Tuesday, December 14th, and I'm ready to present you a market review prepared for InstaForex. What's going on across financial markets? Bitcoin has been trading lower for 5 weeks straight. Major US stock indices are going through a correction as central banks could decide on raising interest rates in the near future. I would like to share an ambitious trading idea for gold with you. Let's discuss it on the chart. Today I have invited a trading plan for gold. I want you to understand that the market is somehow special in the last weeks before the new year. You know, miracles happen on Forex in this period. If your trading experience is more than 1 year or maybe 5 years or even 10 years, you should be aware that the market is very turbulent in the last couple of weeks before the new year. The market might slump or rally, or it might trade on a roller coaster. This trading week is packed with the news on interest rates from major central banks. Tomorrow, the US Fed will unveil its policy decision in the press conference. Interest rates will hardly be changed, but the Fed will present its timeline for raising interest rates. On Thursday, the ECB is due to present a forward guidance. On Friday, the Bank of Japan will come up with its decisions. On the whole, 20 central banks will decide on further policy moves. All of them will make statements on interest rates. Meanwhile, markets are in suspense, including the gold market. I would recommend planning something on gold after the Fed statements tomorrow. Such information background is essential for a trading plan on gold. Since September through October, November and December, the gold price has plotted a bubble on the chart. The same price bubble happens from April through June. I see that the autumn bubble left us a good target which has not been hit yet. This target is good for short positions in terms of my trading strategy hunting for stop orders. Gold was actively growing for 2 weeks and then actively falling for another 2 weeks. There is strong selling pressure actually engulfing. Besides, I see another powerful target downwards. The prospects of raising rates are bullish for the US dollar. Logically, gold might slump greatly amid the firm US dollar. From the current prices, the metal could drop 3,500 points to the first target and almost 20,000 points to the large second target. Let's look at the 4-hour chart. There is a good target at 1,794. The target is clearly seen on the daily time frame. There are stop losses of buyers upwards and stop losses of sellers downwards. I will be curious to see the following scenario tomorrow during the Fed's announcements. Tomorrow we could try to update lows, then fly upwards, taking profit from activated stop orders and then go lower. So 3 price actions. On the weekly chart, the main target will be the large downward target. If we apply the Fibonacci grid, we see that the 50% Fibonacci level is rather high, above November's high. We could try to enter the market in the zone between 61.8% and 50% Fibonacci levels, with large positions sure. After these bubbles, gold will break the large downward target, creating an enormous black candle. It will mean that buyers will rush to close long positions, and they used to believe in $2,000 per troy once. I have already read articles on Bloomberg with forecast about gold at $3,000 and $5,000. You know, some firms invested in gold betting on its bullish prospects. They will be able to limit their losses only in that zone that we will bump into. We even might come to the targets we were hunting for back in 2019 and 2020. I won't be surprised to see the level of 1,446. So the plan for the price action of over than 10,000 points is feasible. If you want to offset all your losses incurring this year, please consider my trading plan. The euro-dollar pair is hard to explain. I'm not involved in this price action. I expected a upward price move. Commonly, I stick to technical patterns, and the market catalyst for me was inflation data. I predicted that the pair could move upwards after the inflation reports. Actually, the market didn't do it. I closed my positions at break even, so I exit the market. Americans were buying the pair after the inflation data, and yesterday I'm not trading the pair before the Fed's decisions. And the inflation data pushed the euro-dollar pair up, but yesterday European traders were selling the pair. For me, it is the signal not to push ahead with hunting for highs. Nevertheless, the currency pair is trading inside the buying impulse. I haven't entered this bullish trend of the euro-dollar pair, so I will see. The pound-dollar pair is drifting lower. On Friday, the Bank of England will vote for or against rate hikes. Meanwhile, the pound has got stuck at lows. The market is in limbo. No one would dare to predict their decisions. I guess it's very risky to trade the sterling before the policy decisions. The pound might take any trajectory after the announcements. So that's all for today. See you next week. Bye-bye.